So what are mortgage rates right now in 2025 after the Fed has now cut 2 times? Well, to give a good example to your average buyer, so somebody with excellent credit right now, let's call it a purchase money mortgage. You're buying a house and you're putting, whatever, it doesn't matter, because with if you're not putting a lot down, the rates aren't really that much different as long as your credit is excellent. That's the key. You're just paying PMI, things like that, if you have a small down payment. But right now, we're offering 30-year fixed rates for qualified buyers in the fives. Our rates are not in the sixes unless there's other criteria that there's adjustments and hits, like lower scores. Tiny loan amounts. Tiny loan amounts definitely hurt your rates. The bigger the loan amount, typically speaking, without getting into too much, would get you a better mortgage rates. There are some examples too of deals. If somebody wanted to, we have some crazy rates on FHA loans right now. Our FHA rates are extremely low. If somebody wanted to pay some discount points to buy their interest rate down, we could get somebody a 30-year fixed FHA loan right now in the fours. We could get you like 4.75% on a 30-year fixed rate. That's today, November 2025. Again, that's not a 0-point loan, and it comes with fees to get that, but that is something you could actually do. If somebody was dead set and determined on getting that rate, we could do that. Personally, I don't advise people to do that because, we like to do loans and get people the best rate we can as cheap as possible, because then this rolls them into prime opportunity for our no-cost refinance, where we give a lender credit to pay the borrower's closing costs when rates come down. Now, if somebody, let's say somebody wanted an FHA loan, they got the FHA loan, they paid 2 or 3 points to get that rate on $500,000 for a loan. You're talking about $10,000 if it was 2 points. Now, if 6 months later rates drop 0.5%, 0.75%, they're not going to be as inclined to want to refinance at that point because they just paid all this money to buy their rate down. Well, if they hadn't done that and they would have taken a slightly higher rate, let's say 5.25%, 5.5%, something like that, then when rates drop 0.75%, that we could do it at no cost. Now they've got that rate, and they saved a lot of money without incurring those points that were, in this case, for a short-term loan.